a significant drop in several stocks. Additionally, Warren Buffett made numerous purchases. In fact, since the beginning of the current financial crisis, this quarter was one in which he spent the most money. He has therefore been spending a lot of money and purchasing numerous stocks. In this video, we'll be talking about 8 new stocks Warren Buffett is buying. But before that, make sure to subscribe to the channel and hit the bell icon for more amazing content. Let's start the video now without further delay. Number 8. Ally Financial. We'll now be counting up from the smallest to the greatest purchases, starting with Ally Financial, in which Buffett invested close to $400 million during the first quarter. The most recent quarter for which his firm, Berkshire Hathaway, has made announcements is this one. And for Ally Financial, this one was close to $400 million. This one is also rather intriguing because Ally Financial is essentially a bank, and Buffett has been selling off his bank stocks holdings for a long time. While their Ally investment segment offers financial advisory services, their online bank offers more conventional services like savings and checking. Ally had been rising since the pandemic up until this year, but it has since started to decline by over 30% from its highs. Analysts anticipate that their revenue will expand by roughly mid-single digits over the next couple of years. Financials are often very solid, although they can occasionally move up and down depending on the economy and the circumstances. It's a very dull line of work though, and I've consistently stated in other videos that the only financial bank-related company I actually care to buy myself is JP Chase, which I find to be more appealing and provides me with a lot of exposure to those kinds of markets. Therefore, even if it technically appears to be rather attractive, with an assessment that is around 50% less expensive than the sector and a tasty dividend of approximately 3%, I'll be staying away from it for the time being. Number 7. Markel. But moving on to stock number 2, Buffett also bought some Markel shares for more than $620 million. Unfortunately for me, this is again another very dull stock because the majority of their business is in the insurance and investment sectors. As you've seen from earlier times, I try to stick with technology-related businesses that are more exciting and growth-oriented. As a result, I don't really like to invest too significantly in insurance and investment-related businesses. However, the stock appears to be moving very slowly while also being somewhat erratic. Despite trading fairly near to an all-time high, it has only increased by roughly 35% over the past 5 years. It's not a bad stock overall, but in many ways, it just feels kind of mediocre to me, and I believe that there are better options in the market. The valuation is also mediocre, I would say, with a 17 forward P ratio, and the financials can also be up and down at times without the consistency that you would typically expect from a more kind of somewhat boring business like this. They even don't pay a dividend to make up for that either. Number 6. McKessen. The third stock is the McKessen Corporation, which Buffett purchased for close to $1 billion. This one is also intriguing since after just selling his holdings in biotech pharmaceuticals, Buffett heavily still bought the healthcare solutions firm, which specializes in supply chain management, retail, pharmacy oncology, and special care, distributing pharmaceutical products to tens of thousands of retail outlets, as well as providing medical equipment and supplies to hospitals and doctors' offices across the nation, make up a sizable portion of that industry. McKesson was already trading at an all-time high and has proceeded to rise practically every month this year, in contrast to other stocks Buffett was purchasing on Dipso. Therefore, I kind of doubt that Buffett is now purchasing any additional shares. As the stock price rises, I wouldn't be at all surprised if he actually started to sell some of his positions. Buffett is infamous for buying when people are selling out the stock and frequently selling when investors are nonetheless coming into the stock. Additionally, because future sales are already projected to increase by barely a few percentage points annually, once more, the profits are not particularly high. Simply put, I believe that there are currently more intriguing equities available in the market at lower prices. So I'll take another crack at this. Number 5. Celanese. Buffett is now the 5th largest stakeholder in the company, despite this being his first time buying stock. Celanese is a chemicals company that primarily distributes acids and polymers, which are frequently used as intermediate chemicals for a range of coatings, paints, adhesives, papers, packaging, automotive products, and even electronics. Celanese was also in severe decline up until last year, but the pandemic's impact usually increased market demand for their chemicals as the economy started to recover recover and businesses began to need those chemicals for their products, which helped to revive their sales. However, the same pandemic's effects on the supply chain led to higher pricing as a result of the increased demand for scarcely available goods. The stock fell in January and February when Buffett was likely making his buy and has since been rising somewhat in each of the subsequent months, suggesting that Buffett's decision was probably a wise one. Despite this, the stock is still significantly higher than it was before the outbreak, and even though I adore their dividend because of the stellar growth stats on it, with a yield of less than 2%, it's just not quite enough to actually pique my interest in the stock. Therefore, I'll have to make another pass. Number 4. Paramount Global. The enormous company controls key media outlets including Paramount Pictures, CBS, The CW, Comedy Central, MTV, Nickelodeon, BT, CMT and Showtime. Additionally, it includes their Paramount Plus streaming service, which is where popular shows like Halo, Star Trek, SpongeBob and others can be found. And it has already attracted close to 40 million users, with both a $5 version with ads and a $10 one without ads. There are therefore very reasonable subscriptions available at various pricing ranges, depending on your needs. Considering that Buffett spent more than $2.5 billion on the stock during the first quarter, and that it has fluctuated since then, it is difficult to determine whether he is still purchasing it. But during the past 5 years, it has already lost approximately half of its value, giving it a rather attractive valuation, with a PEG ratio of less than 1 and a dividend yield of more than 3%. The business is also quite profitable, and although revenues did decline in 2020, they appear to be back on course to grow at their typical rate of approximately a mid-single digit presently. Your proportion. This is, in my opinion, a textbook example of a value play by Buffett, and if the company continues to struggle, I would venture a guess that he may acquire more shares throughout this year as well. Number 3. Citigroup. Renowned for being the owner of the well-known Citibank, which presently owns the 4th largest market share in the US. The 4th largest is by assets at about 10% and by deposits at about 5%. Now, this one is a little strange considering Buffett recently sold all of his shares in Wells Fargo, but he chose to repurchase Citigroup after selling it roughly 20 years prior. With a price tag of around $3 billion, it was also a sizable buy, ranking among Buffett's top 15 largest holdings and elevating him to the position of a 4th largest shareholder in the business. Regarding the causes, it's probably just another traditional value that Buffett is playing. Since losing 15% of its value over the last 5 years and currently trading more than 35% below its 52-week high, Citigroup stock has been among the worst performing among the banks. The financial situation took a significant hit in 2020, recovered significantly in 2021, and is now forecast to increase by extremely low single-digit percentages annually going forward. However, the valuation is decent because they currently trade at a discount of roughly 30% to the sector and have a dividend yield of almost 4%. That's not awful at all, but as I told you guys earlier in the video, JP Morgan Chase is the only bank stock that I truly want to purchase right now. Number 2. HP. Known as Hewlett-Packard, you guys undoubtedly know about them from mostly selling PCs and printers over the years, which is obviously not a very high growth market, but they also work in the cloud computing, servers and IT services for businesses. Overall, however, you won't see much, if any, development from a business like this. Obviously 2020 was a low year, and obviously 2021 was a year of recovery, but going forward, sales are anticipated to essentially stay the same throughout the upcoming years. What HP does have going for them, though, is billions of dollars in free cash flow annually, which supports a high-growth dividend that pays close to 3% while still carrying a modest payout ratio of only 20%, a double-digit growth rate, and a double-digit growth history. Furthermore, despite the stock having increased by about 100% in the previous 5 years, it's actually valued at more than 50% below the industry average on several various indicators. So I'm betting that Buffett bought this one more for that reason than anything else. This firm has Apple cash and a lot of free cash flow generation, so they can pay the dividend. Number 1. Occidental Petroleum. A huge oil and gas corporation. In recent years, Buffett has traded oil stocks all over the place. In the same way that you might still sell 66 in 2019 but buy Oxy and Suncorp, then sell 66 again in 2020 while exiting Oxy but buy Suncorp again, only to sell a sizable portion of it later that year. Additionally, he purchased Chevron, of which he later sold more than half last year, only to purchase additional shares this year. Of course, you should also invest in Oxy throughout this first quarter. For Buffett and Big Oil, it's been a veritable rollercoaster trip, but so far this year, it seems like it was a fairly smart wager. That's it, guys. Are any of them yours? Do you intend to purchase any of them? Tell us in the comment section below. If you liked the video, make sure to subscribe to the channel and hit the bell icon. Leave a like, share it with your friends and families, and jot down your thoughts in the comment section below.